Big earnings of the day now. Tech giant Cognizant has missed the bus as far as the January to March quarter is concerned, with it being the only Indian IT giant to actually record a marginal drop in its revenue growth, which came in at just over $3.2 billion in the first quarter of 2016. The bottom lines also saw a jump of just more than 14%, but what's not going down too well with the investors is the cut in its top-end growth guidance, which has been reduced from 14 to 13%. Let's get in Kritika Saxena now, who has a very special guest joining her from New York. Over to you, Kritika.
Thanks for that, guys. Let's go across to Gordon Coburn, the president of Cognizant. Mr. Coburn, appreciate you joining in on the show. To begin with, the one concern that analysts seem to have is the reduction in the upper end of your guidance. So from 10 to about 14-odd%, it's brought down to 10 to 13%. I understand it's not a very large sum. It's only a marginal revision. But what is the reason for that? Are you expecting more pain ahead when it comes to the BFS and the healthcare services verticals?
It's actually interesting. We feel very good about the business going forward. We guided to revenue growth of $140 to $200 million in the second quarter, which is very strong dollar growth, probably stronger than most of the other players in the industry. We hired 11,000 people, net additions in Q1, also leading in the industry. The challenge for us, obviously, on a full-year basis, is our first quarter, our March quarter, was soft. It was at the lower end of our guidance, really driven by weakness in financial services and healthcare. So the math is we now have to grow out of it. So even with a return to healthy sequential growth, it still is a challenge for the full year, and that's why we took the high end of the guidance down. The good news is both in banking and in healthcare, after having a sequential decline, we now expect to return to sequential growth for the rest of the year. So the challenges that we had were largely behind us. We do think growth in financial services will be muted. We do think growth in healthcare likely will be muted. But even with that, we're able to grow sequentially at a very rapid pace going into the second quarter.
So, Gordon, you said that you are seeing some signs of turnaround. You feel good about the kind of order book you have. So, do you expect by the next quarter or by quarter 3 you would be able to revise your guidance upwards? Is there visibility in sight?
No, I would not expect that. And part of the reason why is in 2016 we changed our guidance methodology. Prior to that, we guided to at least a number. Now we guide to a range, and with the expectation as you go through the year, you tighten the range. So I would expect us to be within the 10 to 13% growth for the year. Where exactly within that range we land will depend on what happens in financial services, as we return to growth, sequential growth in that sector, how robust is the growth. And in healthcare, the timing of the acquisitions being completed that are happening by our clients. So I would expect us to be in the 10 to 13% range, and where in that range will depend on, in particular, those two activities.
Okay, I'll come to those specific activities and the specific verticals in a bit. But, help me understand, Gordon. If I look at the revenue growth trajectory, CY16, you saw a growth of about 21.1% in the calendar year. Before that, you saw a growth of about 16.1%. The fact that the calendar year 2016 is expected to be between 10 to 13%, isn't that a concern? And is there a new reality that you are facing now wherein the base has become bigger and the volatility has increased?
So certainly the law of large numbers plays into it, but remember this, last year's growth included the acquisition of TriZetto. So if you exclude that, we grew about 15%. This year, we're growing about 10 to 13%. That includes about 100 basis points of foreign exchange impact. So on a constant currency basis, we're growing about 11 to 14%. So growth has slowed a bit, but it's not as dramatic as it would appear on the surface. That slowing of growth, I think, is several things. One is the law of large numbers, which, as we said, over the long term, obviously impacts the business. And two is the specific impact of M&A in the healthcare sector and the continuation of low interest rate environment and some weakness in the European economies in the financial services sector.
So let's talk about these two specific verticals, Gordon. From BFS perspective, from the clients that you have had conversation with, from the order book visibility insight, by when can you expect to go back to sequential positive growth in the financial services sector?
We are right now. So in the second quarter, we expect to have positive sequential growth in financial services after a decline in Q1. So we are experiencing that as we speak.
So would you say that the pain in the financial services sector will not continue, or you can see the turnaround come back in financial services and it was just a 1 or 2 quarter blip?
I think it's a question of how you define pain. So we're back to sequential growth, but it's not at a pace that one would like in a normalized environment. So there is still caution in spending in financial services, particularly around the large money center banks and the European banks, who are most of them are our clients. So the good news is we are growing again in that sector. The bad news is the growth is still muted because spending is still muted.
So let's talk about the healthcare space. Gordon, break it up for me. The payer space, for instance, has seen some kind of turnaround, but with M&A and consolidation, healthcare space has been very sluggish for the entire sector. By when can you expect positive numbers from the healthcare space, and when do you see the healthcare space stabilizing for you? If you can give me a timeline.
Sure. So on a sequential basis, once again, we expect to have sequential growth in the June quarter. So we're experiencing that right now, despite the fact that there continues to be a deferral in spending among the 4 clients that are going through M&A right now. But what happened is the impact of that deferral in spending hit us in the first quarter, and now that's in our run rate. So therefore, as other clients grow, they don't face the headwind of sequential declines among the clients going through M&A. So it's in the system already, which allows us to grow despite having the deferrals in M&A. Now, the big question becomes, when is that M&A completed? Because when it is, then we would expect to see a significant amount of integration work coming to Cognizant. Now, the low end of our guidance assumes that the M&A isn't completed till the end of the year. The high end of the guidance would assume some of it happens a little bit sooner. So we'll see how that plays out. But once again, the headwind on sequential growth has now flushed out of the system, and we would expect sequential growth in healthcare in the second quarter, along with financial services.
Okay, so can I say then that from the second quarter onwards, you will begin seeing positive trajectory and a stronger order book when it comes to these two sectors? And can you give us a sense about where the larger deals are coming in the next, say, immediate quarters?
Sure. So, after a decline in revenue in Q1, we're going to grow $140 to $200 million in the second quarter. That includes growth in healthcare, it includes growth in financial services, as well as obviously growth in our other segments. When I look at where the big deals are, that's pretty broad. Clearly we're seeing big deals where we integrate in healthcare, where we integrate the Facets platform with Cognizant's hosting capabilities, IT capabilities, and business process capabilities to help clients modernize, transform, and automate their IT. So we have a great pipeline there of deals. When we look at our more traditional IT services, we're also seeing a good pipeline, particularly in industries like large pharma, like banking, places where there's, and Europe in general, where there's is economic pressure. So we're seeing healthy growth there. And then in digital, we continue to see good growth in digital. So we're quite pleased actually with our pipeline, both of new projects from existing customers as well as from new logos.
Gordon, very tight on time. So quickly, in terms of acquisitions, you have been surprising the street with very significant acquisitions over the last 2 to 3 years. So in this year, is there an acquisition in sight? You're sitting on a $4 billion cash chest. Is there an acquisition in sight that can significantly give you a leg up in terms of your inorganic revenue growth?
Sure. So our primary focus is tuck-under acquisitions, and I would expect the pace of acquisitions of tuck-unders will pick up meaningfully from where it was in the last year or two. We have a very good pipeline. Those acquisitions are going to focus on geographic presence.
Right.
Certainly, we'll focus on digital as well as industry capability and technology capability. So a very healthy pipeline there of the tuck-under acquisitions. We always keep our eye out for larger acquisitions, but our strategy is primarily organic growth with tuck-under acquisitions to supplement it.
All right, Gordon, appreciate you joining in as always. Thanks for taking us through those numbers. So, guys, there you have it from the man himself. They are expecting a stabilizing in the healthcare and the BFS verticals coming this quarter onwards. So, the outlook starting this quarter from Q2 is positive.